is history repeating itself in the crypto market, but this time with even more firepower. According to macro investor and Real Vision founder Raoul Pal, the current crypto cycle is shaping up to look a lot like 2017, but on steroids. In a recent interview, Pal said the parallels between now and the last major retail-driven bull run are striking, but the scale and speed of today's momentum are far greater. Back in 2017, Bitcoin and altcoins exploded into mainstream attention. Prices soared, new projects popped up everywhere, and the market was fueled by hype and retail speculation. But according to Pal, the 2025 cycle is different in one key way. It's being powered by institutions. Thanks to the launch of Spot Bitcoin exchange-traded fund, wider adoption of blockchain tech, and the growing integration of crypto into traditional finance, the playing field has evolved dramatically. Investors today aren't just hobbyists or tech enthusiasts. It includes hedge funds, banks, pension funds, and major asset managers. Raoul Pal points to macro conditions as a major catalyst. With inflation cooling, interest rate cuts likely on the horizon, and liquidity slowly returning to global markets, risk assets like crypto are starting to look increasingly attractive. He believes these factors are aligning perfectly to push digital assets into another exponential growth phase. But he also notes that this cycle is unfolding faster than in 2017, largely due to the presence of smart contracts, tokenization, and more mature infrastructure. Ethereum, Solana, and other smart contract platforms are far more developed today, and sectors like DeFi, NFTs, and real-world assets are already integrated into the broader market. Pal warns that while the opportunity is massive, volatility will still be a key theme. Just like in 2017, wild price swings, hype cycles, and sudden corrections should be expected, especially as new capital floods into relatively illiquid markets. So, what's the takeaway? This isn't just a repeat of 2017. It's a supercharged version, with more money, more access, and more market maturity. Pal believes that investors who understand the broader macro narrative and can ride the waves are positioned to benefit in a big way. As always, the big question remains: how far can this cycle go, and how long will it last? If Pal's prediction holds true, we may be entering one of the most explosive phases of crypto growth yet. We'll be tracking this story and all the key market developments right here on Cryptozard News Today. Stay tuned. Last week, there was a sudden jolt to the crypto markets. Bitcoin plunged below $103,000, triggering a wave of volatility and wiping out over $450 million in liquidations across digital asset exchanges. The sharp dip came seemingly out of nowhere, as BTC fell nearly 5% within minutes, catching both bulls and bears off guard. Analysts say the drop was likely driven by a combination of high leverage, thin liquidity, and a burst of short-term market uncertainty, a common cocktail for flash crashes in the crypto space. Ethereum and other major altcoins weren't spared either. ETH slipped below $3,500, while Solana and Avalanche saw similar percentage losses in the immediate aftermath. The entire crypto market cap shed billions in minutes, highlighting just how fast things can turn when volatility strikes. According to data from CoinLast, the sell-off triggered more than $450 million in liquidations, mostly from overly averaged long positions. That means thousands of traders saw their positions forcibly closed as stop losses, and margin calls kicked in. What caused the sudden drop? While there's no single smoking gun, market watchers are pointing to a mix of macro uncertainty and technical resistance around key Bitcoin levels. BTC had recently struggled to stay above the $107,000 mark, and many traders had set leveraged bets, anticipating a breakout. When that move didn't materialize, the liquidations cascaded quickly. There's also speculation that ETF-related rebalancing and profit-taking by institutional players may have played a role. Especially as Bitcoin remains up significantly year, these players often move in size, and when they shift risk, the entire market feels it. Still, many analysts are urging calm. While the drop was sharp, it wasn't entirely unexpected. Bitcoin and the broader crypto market have been in a high volatility phase following months of gains, and corrections are part of the cycle, especially as the market adjusts to new all-time highs. Zooming out, Bitcoin is still trading well above previous resistance zones from earlier in the year. Many long-term bulls believe dips like this present an opportunity, not a reason to panic. They point to strong fundamentals, continued ETF inflows, and long-term institutional interest as reasons to stay optimistic. But in the short term, the message is clear. Volatility is back, and traders should be ready for more choppy moves as the market searches for a new equilibrium. We'll continue to monitor the situation as it develops and bring you updates on where Bitcoin and the broader market head next. Stay tuned, and as always, trade safe. A new name is making serious waves in the crypto space. And it's not Bitcoin or Ethereum, it's SpacePay, a futuristic payment-focused project that just wrapped up a highly successful pre-sale, and analysts are already buzzing about its massive upside potential. SpacePay has captured investor attention with a bold mission to revolutionize how crypto payments are made in the real world. Unlike many tokens that focus on speculative value, SpacePay is laser-focused on utility and adoption. The platform aims to integrate directly with existing point-of-sale systems, allowing merchants to accept crypto payments as easily as they do credit cards. And without the usual friction, at the heart of SpacePay's vision is speed, simplicity, and scalability. The project is designed to support rapid, low-fee transactions using its native token, SPY, and integrate seamlessly with major blockchains. It plans to leverage advanced blockchain architecture to reduce wait times and transaction costs, making everyday crypto use a real possibility for businesses and consumers alike, and the market is taking notice. SpacePay's pre-sale went viral, attracting both retail and early institutional investors. According to reports, the token's demand surged across crypto communities, with many calling it one of the most hyped launches of the year. The project's roadmap includes major exchange listings, POA's integration trials, and a full launch within the next few months. Analysts say the hype isn't just based on marketing. It's based on real-world application. As adoption of crypto grows globally, payment solutions with actual usability are expected to be the next big wave in blockchain. SpacePay fits that narrative perfectly. There's also speculation that SpacePay could benefit from macro trends. With rising interest in digital currencies and businesses seeking faster, cheaper ways to process payments, a platform like this could see significant traction, especially if it delivers on its technical promises. Of course, as with any emerging project, risks remain. Execution, regulation, and competition from bigger players are still real hurdles. But for many early backers, SpacePay offers the kind of real-world potential that's been missing from many recent altcoin launches. As the project gears up for its next phase, all eyes will be on how it performs post-pre, especially once it hits major trading platforms and real-world integrations begin. Could SpacePay become the next big thing in crypto payments? We'll be watching closely. Stay tuned to Cryptozard News today for updates on SpacePay and all the emerging stories in the world of crypto. The Pi network is once again grabbing headlines, and this time, it's for all the right reasons. After a period of stagnation and uncertainty, Pi appears to be setting the stage for a strong rebound. As technical analysts identify a rare bullish pattern forming on the charts, with millions of users worldwide and growing excitement in the community, could Pi be gearing up for a breakout? Let's take a closer look. The buzz began after analysts noted Pi network's price movements are forming a classic inverse head and shoulders pattern, a formation often seen before a significant trend reversal to the upside. This comes after weeks of consolidation and mild downward pressure, suggesting Pi could soon shift momentum in a major way. This bullish setup, if confirmed, could pave the way for Pi to retest key resistance levels and potentially break out 2 new local highs. While Pi isn't yet trading on major exchanges, anticipation around its eventual mainnet launch and broader integration continues to fuel speculation. But the technical pattern isn't the only thing drawing attention. The Pi network ecosystem has quietly been expanding. The development team has remained active, introducing small updates, strengthening infrastructure, and preparing for greater decentralization. Meanwhile, the APBSD mining process unique to Pi continues to onboard new users, keeping community engagement strong. As of now, Pi boasts over 60 million users globally, making it one of the largest grassroots crypto projects in existence. This massive user base could be a key factor in Pi's future success, especially if and when the network becomes fully operational and begins open trading. Still, caution is warranted. Because Pi is not yet freely tradable, price action remains speculative and often driven by sentiment rather than market fundamentals. There is also the ongoing question of how Pi will establish real-world value once it goes live on centralized or decentralized exchanges. That said, the technical indicators are clear. A rare bullish pattern is forming, and if momentum builds, Pi network could be poised for a dramatic return to the spotlight. Whether you're a long-time Pi miner or just watching from the sidelines, this could be a pivotal moment for the project. As it moves closer to full-scale launch, we'll be keeping an eye on Pi Network and bring you updates as the story develops. Right here on Cryptozard News Today. Stay tuned. A massive leap toward mainstream crypto adoption is underway, and it's coming from two major players. Chainlink. In a groundbreaking partnership, the decentralized Oracle network Chainlink has teamed up with global payments giant MasterCard to make it possible for more than 3 billion cardholders to purchase crypto directly on-chain. That's right, users could soon be able to use their regular credit or debit cards to interact with blockchain applications in real time. No centralized exchange required. The collaboration was officially unveiled during an industry summit, where executives from both companies highlighted the integration of multi-token network with Chainlink's cross-chain interoperability protocol. So, what does that actually mean? MasterCard's multi-token network is a framework designed to facilitate secure, seamless digital asset transactions across blockchains, financial institutions, and even governments. Chainlink's CCIP, on the other hand, is a secure messaging protocol that allows data and tokens to move between different blockchains. By linking these technologies, MasterCard and Chainlink aim to bridge traditional finance with decentralized systems, allowing users to transact with crypto and stablecoins as easily as swiping a card at a shop. This isn't just another Web3 announcement. It could mark a serious shift in how people access digital assets. Until now, onboarding into crypto often involved jumping through multiple hoops, creating exchange accounts, dealing with lengthy KYC processes, and learning new wallet systems. This partnership streamlines the experience, effectively putting blockchain access into the hands of billions, through a payment method they already know and trust. Analysts are calling the move a watershed moment for crypto usability and adoption. Chainlink, already a key infrastructure layer for DeFi and tokenized assets, further cements its position as a bridge between traditional and digital finance. Meanwhile, MasterCard continues to embrace digital innovation, proving once again that legacy institutions are betting big on blockchain. Of course, questions remain about how soon this integration will be rolled out, and which regions will support it first. Regulatory compliance, user privacy, and transaction fees will all be closely watched in the coming months. Still, the message is clear. Crypto is going mainstream, and this partnership could help unlock the next wave of global adoption. We'll be watching this development closely as MasterCard and Chainlink begin their rollout. Right here on Cryptozard News Today. Stay tuned. The Pi network is once again in the spotlight, with the price of its native token climbing nearly 5% as the community gears up for a major update scheduled for June 28. After weeks of quiet anticipation, traders and miners alike are now closely watching Pi, as excitement builds around what could be a pivotal moment for the project. While full details of the update are still under wraps, early signals suggest significant changes are coming to the ecosystem, and investors are already reacting. So, what exactly is happening? According to the Pi Network team, the upcoming June 28th announcement is expected to mark a milestone in Pi's transition toward full mainnet deployment. While Pi is still operating in a limited environment phase, this update may bring it one step closer to fully unlocking token transfers, exchange listings, and broader utility. The rising optimism has sparked renewed trading activity across unofficial Pi markets. Even though Pi is not yet listed on major centralized exchanges, peer-to-peer valuations and app-based tracking show a noticeable uptick in demand. Pi's unique AP-based mining model continues to attract new users, especially in developing regions where mobile-first crypto solutions are gaining traction. With over 60 million users already in the ecosystem, the Pi community is one of the largest grassroots movements in the entire crypto space, and any progress toward open mainnet functionality generates serious buzz. But it's not just about hype. Behind the scenes, the Pi core team has been working on infrastructure improvements, KYC scalability, and ecosystem development. If the June 28th update delivers on expectations, it could open the door to decentralized apps, smart contracts, and perhaps even the long-awaited exchange launch. Still, it's important to manage expectations. Pi remains in an experimental phase, and many of its features are still being tested. The network's value proposition is rooted in accessibility and adoption, but it must also prove it can deliver real-world use cases and technical scalability, especially as it edges closer to integration with the broader crypto economy. For now, all eyes are on June 28th. Will this update finally move Pi toward open mainnet? Will token transfers become fully functional? And will the token finally make its debut on major exchanges? We'll be following this story closely and bringing you full coverage as the update drops. Right here on Cryptozard News Today. Stay tuned.